What's going on, guys? Welcome into the live stream and the webinar on a Sunday. For those of you that are watching from all over the world, thank you. Welcome in. Hope you guys are having a good day, have a good weekend. If you guys can hear me, just give me a quick thumbs up in the chat. That'll be really helpful. Appreciate you guys tuning in, even if you're from the Discord or anywhere on YouTube. So hope you guys find this debrief or this breakdown useful. Just wanted to come in and chime on a couple of things that are going on in the equity markets. Currency markets are definitely more volatile right now with multiple fronts of the war developing in Ukraine and Russia. Let's see. Can you guys hear me really quickly? I just want to make sure that you guys can hear me properly. Quick little thumbs up in the chat if you can. That'll be really helpful. All right, excellent. Thank you so much. I appreciate it, Carlos. So I want to do a quick breakdown from based on the macro standpoint first. We'll kind of cover the macro situation, and then we can get into the technicals a little later. Of course, the S&P 500 was pretty choppy this week. Choppy price action the entire week. I was actually out in the hospital this week. For those of you that don't know, kind of had a shoulder injury and it didn't really go as well as anticipated. Ended up being admitted to the hospital for a while. Ended up with a skin infection, and then I spent pretty much the whole week in hospital, which was good because I didn't, partake in this entire chop. So yeah, sorry, but I kind of wasn't around this whole week. Now that I'm back, I'm slowly catching up on the backlog of everything that I have to analyze and digest for you guys, as I always do. Here at EGA, my main job is to digest everything and make it palatable so that you guys can understand. So mainly a choppy week, but we had a pretty strong job report numbers, right? So it was a little bit of a mixed progress, and then they had some second round of talks between Ukraine and Russia, and then a conflict at one of the largest nuclear power plants that kind of gave this sell-off, right? This was the main trigger for the sell-off this week, about the power plant, and then things are gonna get worse and stuff like that. The job reports though was actually pretty positive, if you think about it. Showed the U.S. added about 678,000 jobs in February, above the consensus expectations, but also the wage pressures have eased at the same time. So that's looking a little positive for the job market and the economy in the U.S. Of course, economists continue to forecast 7 Fed rate hikes in 2022. Rightfully so. We have inflation numbers that are pretty hot, and we should continue to see that this week, getting into FOMC towards the end of this month. Of course, Jerome Powell indicated that he's inclined to support a 25 basis point hike at the March FOMC meeting, and then he hinted at some potential consecutive hikes in 2022. So that's kind of the macro update, right? And we're seeing, amid all of this volatility, a lot of hedge funds are covering some of their shorts, and we have been seeing this descending pattern on the S&P 500 moving into this territory, right? Following a lot of demand for U.S. equities, actually. We're seeing the demand come in slowly, but remember, demand is a very fine pivot, right? It's kind of like a one of these balance things, right? So you usually won't see the scales tip to either side until one side is truly heavier, and right now we're just seeing a little tip to the bullish side. But however, I feel that there is a little more downside here before we see the upside, at least a double bottom to retest the 4140s on the S&P 500. So more on that in a little bit, right? We have these interim demand zones that we draw in to kind of show where the price action is surrounding, right? Now on the daily chart, things are not looking that great, right? On the weekly chart, this is a nominal correction in the S&P 500 after a huge monster rally, right? We've had a monster rally since the 2020 market bottom and running up a really healthy amount. Of course, this is a very healthy pullback. with developments all at the same time, it might obviously cause a little bit of a rouse. But remember, these are all opportunities in the long run to add to your long-term positions, to fatten up your long-term portfolio, giving you more expectations for long-term return, right? So let's just get back to a couple of important things. Following Q4 earnings season, companies have pretty much exited their buyback blackout windows, and now they kind of reappear eager to re-enter the market after the sell-off in U.S. equities. Especially, if you look at this specific time in history right now, this is a very attractive, period for companies to issue buybacks, especially companies with successful balance sheets, right? If you're a company that has a tremendous amount of cash sitting on hand, this is a great time to execute buybacks because you get great, efficiency on your money or return on capital to execute those buybacks. That's one of the forefront things that I think about when I'm, trading in these markets. It's how are market dealers and how are other bigger players, especially the companies themselves that trade within the S&P 500, going to react in this situation, right? These are all important things. So roughly 25% of buybacks now are executed on a discretionary basis, with 75% of them being algorithmic, based on Goldman's trading desk report, right? And just summarizing the information that I read over the weekend. Excuse me. Sorry. And total authorizations, by the way, have already totaled $238 billion year to date, which is a record high at this point of the year. Okay, and obviously it's no surprise that companies are issuing huge buybacks because of huge dips in the stock market, which makes it efficient, as I said, for them to buy back their own stock, right? So this is actually record buyback so far on stocks, which is a good thing. So it's going to add to liquidity. But however, this week though, we are seeing sparse liquidity. We are seeing signs that are pointing towards sparse liquidity. And when we have low liquidity environments, when volatility is high, it tends to cause very big swings in price action, right? So looking at the background information, of course, all of these things contribute to what's happening in the background of the S&P 500. Now, of course, the technicals are another thing that we will cover in a second. But it's important to look at the background of all of these things because they contribute in one way or another, okay? So, in fact, more than any, people who are buying back, it's companies that are buying back their own stock right now. And, you can see this from the GSTH REPO. Oh, we don't see it on TradingView. I can actually access this information on my repo. So I was going to show you, but you can see there's pretty much Goldman has like these baskets that they create where you can access this information pretty easily. And so you can see that the rate hike in interest rates, or the expectation in interest rate hikes, are causing a lot of these companies to buy back their own stock. So I think Goldman estimated the 2022 S&P 500 buyback forecast to $1 trillion. Yeah, you heard me right, guys. 1 trillion, okay, this year, representing about a 12% growth from previous years, okay. I think 2021 was a record 911 billion. I mentioned this on the, webinar or Discord a while back. So this year we're looking at even higher levels of buyback, and rightfully so, as I mentioned, right? And then, of course, we have a strong backlog of authorizations, really great sales, earnings, right, growth. Like we're seeing the U.S. economy, majority of the leading companies anyway, right? When we say leading companies, we mean the majority leaders in the S&P 500, right? They're seeing excellent growth, right? And they will continue to see excellent growth, right? As long as they can cut back on CapEx, R&D, M&A, and all of those things are going to come with their own risks, okay? So the macro forecast here is quite straightforward, right? Of course, this buyback purchasing comes with a risk. What is the risk? If the SEC, they hinder this this path. Now, there was a key plan that was proposed by the SEC recently. I think it was called 10b5-1, which pretty much includes a mandatory cooling off period after adoption before trading can begin. So it limits basically single trade plans, and it pretty much enhances the corporate disclosures regarding steady buybacks, stuff like that. So pretty important. That would be a key thing to also keep in the background, right? So these are all like tidbits of information I'm kind of just passing along to you for you to keep in the back of your head. All right. Now, what do we actually feel here? Well, what is our forecast? What is EGA's outlook on all of this? I think that there is a little further downside to backtest some previous levels before we actually move higher here. I personally thought that this volume that came in on this bottom here last week was not enough to trigger a bull rally. We need a much bigger volume than that. On the daily, you can see this volume was only second to significant volume that was trading the whole of January, right? So almost a month plus more ago, we had a lot more trading volume on this bottom here, right? And I think that we need a lot more volatility to die down, and then a lot more volume to come in order to see that. And then there's also the other scary part, which I'm going to get through in another few minutes here, of the small and mid caps. So we're going to go through all of this stuff right now. So let's look at the technicals to kind of get a good understanding of everything, so on and so forth. So looking at the S&P 500, right? We're hitting a very key demand zone. Of course, this level here is an absolute money zone, right? We've seen very strong bounces in this zone before. So this remains a key level of support, right? 42, what is the level here? Let me tell you real quick. Let's just say 42.30, right? 42.30 remains a very key level of support. And then after that, this level here, 41.40, has remained a very key level of support as well, right? Demand has come in both of these spots. And of course, before demand comes in, there has to be panic selling. So the panic selling happens, and then demand comes in after that, right? And this week we saw a backtest, or rather a retest of the 4400s, and then a rejection of the 4400s, moving into this little ABCD wave here. This rejection here now goes one of two ways. So there is really no point in trying to forecast where this goes, right? Now, I personally think there's a little downside for us to backtest 4200 or 4138, 4140, which is the level that we've been talking about, right? So these two levels will possibly be backtested this week. However, we should be non-biased, right? Non-biased. So as traders, we want to be non-biased. So the pivots here are really going to be 42.35, let's just say, right? 42.35, 42.30, this is the pivot for this week, right? Below 42.30 gives us downside extension into 41.40, right? And of course, we don't want just a break, we want a break and retest, right? So a wave up of some kind, maybe a retest of the 42.50 level. Rejection of the 42.50 level sends us down into 41.40, right? And then of course the other way, if you look the bullish direction, then we want to bounce on 43.20, right? 43.20 breakout and then retest for the upside into the 4400s. That would be the retest of the upside. So there's only two ways this plays this week, right? And the Asian market open right now, this is live price action on S&P 500, is already showing a possible downward slide in the futures. So that's the two ways that technicals plays on the S&P 500. Now on the QQQ, things look a little different. They look a little different. Now we've been in this, of course, head and shoulders pattern for a while, right? You can see the head, left shoulder, right shoulder. And then the neckline is, at this, let's just call it around 320 to 330 range right now, right? So really anticipating a break of the 320 to 330 range sends us further down. Now we don't have interest rates or the monetary policy really supporting tech right now. So there is a possibility for more pain, a continued sideways action, continued descent here on tech, right? 25 basis point hike, by the way, on the monthly Fed expectation is going to be lower than what we were expecting. So that might cause a short-term pop in indices, okay? It might cause a short-term pop in valuations as well for tech. But don't play into it because I strongly think that, there's still a possible rejection. Now, this is a, downward kind of wedge pattern, right? And a squeeze, funneling into this region is actually going to be bullish for a breakout due in the future. So the pattern on the QQQ looks like we are approaching some kind of a, key level here where we'll have a pivot either way. And that's really important to note here because the price action can continue to squeeze. From the TA perspective, obviously, we might see a breakout into the 350s in the near future to backtest, this dual zone that we have here. It's a very strong dual zone right here, right? Of course, a break of 335 will send us down into 326 this week. Of course, we want to break down here. Let's just say, to be really safe here, 334, 333 is really what you want to go for, right? On the 4-hourly. So breakdown of this level, a retest of this level will see us go further down into, let's just say, 326, 327, right? That's your key level for downside extension. And that's what you want to be really watching here on QQQ. Bond market, let's look at the right fat tail of the bond market. As you guys know, I look at bonds as well when I trade. It's just all relative. Remember, credit markets are, where you can sniff out things that are happening in equity markets. So the fat tail of the bond here, 20 plus years to 30 years, seeing a little bit of a relief pressure, right, to the upside. People buying bonds once again. Of course, bonds are sought out during times of uncertainty and in a war-like scenario. Now, I do like if TLT here can hold and stay above 141-ish. I do like taking some of the upside here. As I mentioned a couple of weeks back, we played a long position on TLT, made some decent money on this one. From this oversold level here. And right now, we are beyond the bear flag scenario. Initially, we were thinking of the bear flag scenario. But we have retraced past the 50% Fibonacci, and we are now sitting on top of it. So chances are that we go back for a full retracement here, up into the 144.25s for a retest of the back. So this high range here, and try to retest those tops once again. That's one thing that I'm looking at here to play into this next week is the bond market instead of playing the equity market. And one of the reasons why the S&P 500 and QQQ still look, well, S&P 500 still looks bottom heavy is because of IWM, right? Russell 2000, which is small and mid caps, are still looking quite weak here. Of course, that was initially a bear flag. And we haven't quite hit the 50% retracement here, so the bear flag is still pretty valid, I think. Oh, we did actually hit it. Okay, the bear flag is no longer valid. So we are actually seeing now a sideways consolidation here once again in IWM and expecting hopefully some kind of a break in either side. So this one's not really that difficult to figure out. Trading in a range right now. This could be one of two things. So this could be markdown and then accumulation for the next markup phase, or this could be distribution for the next markdown phase, which means halt versus the next down wave, or halt versus the next up wave. There's no need to guess here. Don't play the range. Be smart about this. There is a very little risk to reward ratio playing the range. Maybe about $15 in one way. The better way to play the scenario is obviously to play the breakout, bounce, and then the upside, or the breakout, bounce, and then the downside, right? So you don't want to guess here. Play whichever way that breaks, wait for the setup to actually form, and then you can play that way. So let's look at some of the contributing brick factors to the S&P 500. Apple, for example. pretty strong buy up last week. Apple has been actually brick solid since this entire conflict has started. We do see obviously a descending kind of a trend line here that we are kind of squeezing into. And we'll see if we continue to squeeze into this little pennant that is forming. There's a little pennant forming here. Continuous squeeze, pop out in either direction will send us either way, right? So no need to guess. Once again, play the pivot points, right? Don't try to guess what's going on here. It's pointless to try and forecast. That's always my my way of thinking about these things. Last week, I shouted out on the Discord community, and you know, of course, if you don't know about us, we have a Discord community where we post institutional analysis, research, and we don't do signals, but we teach you how to trade instead. So we posted about the utility sector being bullish, and actually it was right about here when I posted the idea. And then utilities ended up running very hot for the next couple of hours into the close. This was the reason why I was bullish on utilities is because utilities tends to be a very defensive sector. When we get markets being this exuberant on either side, people tend to go for stable stocks that return, you know, very... just stable cash flow, right? So we saw inflows in utility last week. Of course, that play is already done. So don't try to chase this week. Of course, this is still on a pretty big uptrend. So we are seeing a lot of this price. I do still think there's a little bit of extension here on utilities. So we'll see if we can get... The only way that I'll play XLU here is if I get a nice firm breakout out of 72. And then a back test of 72, confirming this is a new support area. Or demand's coming in at this area. Of course, I want to wait for sellers to really sell into this, and then catch the liquidity that I can playing the upside here into the 23 and 38 Fibonacci extensions for this wave to the upside. So that with utility, that's what I really see. With NEE here, this is one of the stocks that you can play as a play for utilities. Bounce in a nice demand zone here, and I think that if we continue to see some price action here, we can actually play this one to the upside next week. So playing this into the $85 range, just giving you guys a couple of ideas here. This will be on the snipe list for this week. So this is a great one that I do want to look at for this week. Okay, how are you guys doing? Everybody, can you guys following along okay here? Straight crazy, S&P 500 down $6 this evening, and SPY Holdings is holding between VWAP and price double. Yeah. Definitely lots happening, in terms of futures and things like that. But definitely want to hear from you guys. How's everyone doing? Do you guys, is anyone here, just tuning in from YouTube and you just found us randomly? Or, are you tuning in because you're a subscriber? What's up, guys? I'm going to take a sip of my coffee. Well, we're glad to have all of you here. How many ever that you are, we're happy to have you here, and we hope that you'll subscribe and, we find obviously the information that we're putting out important and informational. So let's look at some other things that going on this week. Now, last week we also missed a monster of a trade on FCX here, Freeport-McMoRan. This was another sector, right? Minerals and oil exploration. This has been a very big sector. Rare earth metals and stuff like that. Definitely one of the important sectors that we are looking at this year to trade. Especially with war and conflict, it creates a scarcity for a lot of these sought-after materials, right? And FCX is one of them that we've been wanting to play the breakout on. In fact, I once made a boo-boo playing this breakout. Went on a limb to try and play this huge breakout out of this key supply zone. Ended up selling off and then rebounding very hard to actually make a huge wave up. So it kind of shook me out there. It's fine, you learn over time. You kind of learn from these mistakes. Momentum has been very strong this week, right? The past couple of trading days has been excellent for the stock, just in terms of everything, right? Volume has been kind of, pretty solid, trading above average volume. This is one of the sectors that I would be looking for a pullback on to play the upside bounce. Now that we're in price discovery, there is a possibility that this continues to run. Then another one that I'm watching this week is Marriott. This is at a pivot level now. So there's two ways that this will go, obviously. The first way, this bounces here very strongly and then continues to move to the upside, which I think is a great risk to reward ratio, right? The other is it breaks down and then starts to reject this level at 160. And if it starts to reject this level, then we want to play the downside here into 152. And then beyond into 148 for support, and then eventually come back into this upside here. So we'll be looking to see how Marriott performs this week as well. Let's look at semiconductors really quickly. It doesn't look like we're going to get a reversal. We have been looking at this this sector very, very closely, mainly because semiconductors are a very interesting sector, right? Now, I know a lot of you definitely are bullish on semiconductors because there's been a lot of hype surrounding them, right? Nvidia, AMD, these are two stocks that I think anybody and their mother knows this past year, because during the 2020 to 2021 COVID stock market kind of crash and then buyback, we saw a lot of important sectors seeing inflows, and one of them was semiconductors. Now, one of the things about semiconductors that people fail to understand is that this is a cyclical sector, right? What does that mean? It moves in a cycle, like, there's always a cycle. You will realize with semiconductor, okay, this was COVID crash, so ignore this, but it's always cyclical, okay? So it moves in a cycle. And in case many of you haven't realized, I don't know, if you guys have been following me for a long time, then you would have heard me talk about this. But semiconductors, and I've mentioned this on the Discord multiple times now, we are in approaching a situation with semiconductors where the peak demand periods are starting to ease, right? I know that you consistently see headlines of, oh, we are in a semiconductor shortage, but let me just tell you the reality that eventually this the supply choke that people talk about is eventually going to go away, right? It's eventually going to go away, and you need to realize this. So as we speak about semiconductor markets, they're like a cycle. Right, I've spoken about this many times before, right? So just think about like a cycle. You have adoption of new chips, right, which was in 2020 end. This was when AMD, Nvidia came out with new chips, right? And let's just say this was 2020, right? And this is when demand is very high and supply is very low. So demand's higher than supply here. So this is where usually semiconductor prices are very unstable because supply's not able to catch up. And then you have, supply kind of catching up, which is the whole of 2021. And now we are pretty much here. We are at peak demand and we are at peak supply here now. What's coming after this is a pricing in of the bust cycle of the semiconductor cycle. So what comes here now is demand, if it doesn't continue to be super high or as high as it has been for the past 2 years, then you will start to see supply overcome demand. And then those chips that you see for the past 2 years, remember Moore's law, transistors and these chipsets, they only double up every 2 years, right? So it's usually a two-year boom cycle, 2-year bust cycle, 2-year boom cycle, 2-year bust cycle. So you can really time these markets pretty easily, right? So obviously, in this semiconductor market where we are starting to see the sell-offs, is a pretty good time to take on some risk, right? Take on some risk for the next boom cycle. And right now, actually, one of the cycles that are really hot are cybersecurity, right? Some of the sectors, sorry. Cybersecurity is really hot. It's needless to say that energy was a very obvious play from last year. 2 years ago. In fact, I don't know how many of you have been on our stream for. Like, if you have been on our stream for really long, you would remember the time when I told you guys that XOM was a crazy buy at the COVID prices, right? Where it was trading like at a ridiculous price in 2020, like when it was consolidating here, right? Like at 30 something dollars, I told you guys, dude, this is a crazy ass stock to buy, and now it's trading at 80 bucks, right? So this is now officially coming into the territory where it's retracing back out of this huge correction of a price it had last year, and we're seeing the reverse, right? And just like you see the reverse in a lot of things in this market, you're going to see the reverse in inflation as well. Trust me, it's going to come. So what you see now happening with inflation being high, we're going to see stagflation in the future. That's just the way things go, right? Okay, what other opportunities are there this week? Let's have a look at Microsoft real quick. This is now broken down into some really negative territory. Well, when I look at Microsoft here, it's kind of depressing now. So, long-term trend line, it has broken that. It has rejected it multiple times, coming into a demand zone here. It does look like Microsoft wants to peg itself into a sideways trend for a while. Very obvious head and shoulder on across everything, and of course the neckline is going to be around 285, right? 285 is the level. Let's just see here. Maybe not 285, 283, 280. Let's just call it 280 even, right? Below 280, Microsoft is going to experience some real turbulence. So this is one that I'll be watching this week as well. Datadog is the other one for. This was a cup and handle last week, not a cup and handle anymore. Just mainly because it's retraced 50% back from its high on this previous wave. So this handle is now more than 50% lower. We don't consider that a cup and handle anymore, so it's no longer going to be a tradable cup and handle. But we can still play the pivot points here, right? Airbnb is the other one that I want to trade this week. Hitting the demand zone once again. This demand zone has been pretty strong. Let's see if we'll break it this year. This week. Either way, this is a good pivot to play. Square with the ugly gap fill to the downside, right? That's another one. And then TTD for the back test here for the upside. I don't know if we'll get the upside play, but we'll see. So there are really lots of opportunities. Even in this market, there are lots of opportunities. You just have to remain really, really concise with what you're trying to do this week, and keep your risk moderate, right? You're going to have to take on some risk, but keep it moderate. Okay, let's do some ticker breakdowns. Does anybody have any ticker breakdowns for me? You want me to do a ticker breakdown? Go ahead, put it in the chat. I'll try to do it for you. Boeing is almost hitting its 38.2 extension here. Go ahead if you are here in the live stream. Appreciate you guys being here. You want me to do a breakdown of some kind. Go ahead and give me the tickers, and I will break them down for you. Don't be shy now. I'll take a sip of coffee in the meantime. Of course, all 20 of you that are here, I would truly appreciate it if you could take a second and smash the like button. Doing so helps me with the algorithm on YouTube, and so I truly do appreciate you hitting the like button on this video. Of course, if it's helped you out. AMD. All right, let's do AMD first. Okay. AMD key level of demand has been, actually it's kind of higher, a little higher than this. Key level of demand is approaching, right, to this side. Let's just move these a little further this way. Let's see here. Okay, so let's get rid of the fib real quick so that things are a little more concise here. Okay, from my perspective, a very obvious pennant is forming, right? Very obvious pennant. There's a long trend line here that has been kind of forming too, right? You can kind of see that. So AMD is kind of squeezing here. The same way that you know, the Qs are squeezing, AMD is squeezing, right? Look at the similarity here, right? You can see a similarity that this is kind of squeezing this way, right? We're kind of squeezing, trying to break out either way, right? And the same thing's happening with AMD here, right? And obviously because semiconductors are a pretty big, it's a pretty big sector within tech, right? So the QQQ is going to be driven by this obvious force. Now, how would I play this? This is interesting. So obviously I wouldn't play this range. It's stupid to try and catch the upside and downside and upside and downside and upside and all of that in between. Very simple here. Play the breakout and the retest, right? Of either of these levels. So that will look like, let's see, a break above, let's just say, I'm going to put my alert here for this week. Let's just say 119.53, right? Ish. I want to alert here. And then for the downside, let's just call it below this, right? So I don't want it to tell me when it's breaking it. I want it to tell me right before. So 113. So either side here. So it's either going to be around 119.50. Let's just call it 120 even, right? Honestly, if we could break 125, that would be beautiful. Beautiful. 125.70 is the number to break, right? We really want to break out of this level for really bullish price action reversal. This is bullish price action reversal level, right? And bearish price action reversal will be breakdown of 112, let's just say 112 even. But then the back test, retest, right? We need a retest. So breakout and retest of the 112 and then the downside extension to 96. That would be the downside play. Upside extension would be into the 132 to 136. This is a dual zone here. Very key dual zone. So this would be the upside extension here in AMD. That's the way that you play it. That's macro for the next 1 to 2 weeks. So I'm not just helping you to break down this ticker for this week. I'm telling you, look at it from the broader term. You know, that's the levels that you really need to watch here. If you're watching day trading level, like intraday level looks good for a possible bounce here, right? If you look at intraday levels, then you know you really want to play the pivot here at 110. 110, 111 is a pivot to the upside. So 110, 111 gives you a good risk to reward ratio. If you take your risk here all the way down to around 108, about a $2 risk is going to yield you about a $4 upside. So that's not bad, right? Up into 116 roughly. That's not bad at all, right? So let's say you play it above 112 or 110. You can get 1:3 here even if you play 110, above 110. So yeah, that's the way I would observe this on a smaller time frame, bigger time frame. Okay, I hope that was helpful. If that was helpful, let me know. Let's see. SoFi. Okay, let's do SoFi. Oh boy, this one doesn't look that great. Now, one thing about this one is I believe it is considered a growth stock, right? What's the market cap? 8 billion. Yeah, below 10 billion. I would stay clear of this one for now. I wouldn't trade this just mainly because it could be manipulatable, right? I tend to trade things that are above 10 billion market cap just to avoid, you know, any flash liquidations. And this considered like a kind of a finance growth stock, right? The price action here is just not really tradable, I would say. It's really in a really terrible range. I avoid trading stocks like this unless I see a defined range. So I'm really sorry, Max, but this one's not really a great one to trade. Like, obviously it's coming up into the IPO pricing at this point. Like, it kind of dipped down to $9 last week. Even on this dip right here, you can see this dip here was mainly just buyers, and that's the reason why sellers are forcing the price down this week or this past week, right? How do you know, right? These are very obvious things that you can see years and years after looking at candlesticks, right? Just a quick little lesson for you guys, basics of candlesticks once again, and also just the basics in general understanding, right? If you see a sell-off like this and then a strong buy-up, right? But you see that happen on low volume, that only means one thing. That means that there is a lot of buyers in this market, but no sellers. And if there is only buyers and no sellers, that's a terrible thing. You don't want to trade in that market, right? Why? Because the moment the sellers step in, this is going to happen. It's going to very quickly whipsaw the price in either direction. So think about it this way. If all buyers buy at the same time and all sellers sell at the same time, that's what results in extreme price action like that, right? So you don't want that situation. You stay away from things like that. That's the reason why we look for volume to be very high when we're trading, because high volume gives us a good understanding that there are equal buyers and sellers in the market, which gives us a healthy trend, right? A healthy price action or healthy trend. Okay. Cool. All right. So I hope that was helpful. Okay. Next, JP Morgan. I'll do one of them. JP Morgan. Oh, sorry. Wrong one. JP Morgan. Okay, I'll do a couple more. We'll do a couple more ticker breakdowns. JP Morgan looks like a further downside extension here. It's coming back to its intrinsic valuation now, based on last year. Oh, I need to do an update valuation to this on my model. Last year's intrinsic valuation for this stock was 128. We kind of floated above 172 for a while. It came back down here. $128 seems to be a very strong level of support, though. I mean, this is a clear demand zone right here. It's also a dual zone. Oof, it could get really ugly below that. So, yeah. Market is kind of pricing in the interest rates at this point, right? That's what's happening with financials here. We're having a cool off, right? Remember that financials were the leading sector just a couple months back, right? How many months back? When all the talk was about rates being hiked, that's when XLF was on a rocket, right? And all of that has been priced in already, right? So XLF is actually gearing up to go short here, right? We should be gearing up to go short on XLF here, right? For the downside extension. Mainly because the market sentiment is changing, right? I mean, we don't want to go against the trend. You want to follow the trend, right? So with JP Morgan, it looks like a little more downside extension into 128s here, 127, 128. In terms of this wave count, so 1, 2, 3, 4, 5. We have, the third wave here, 1, 2, 3. The third wave is already completed here, wave 5. This should complete wave 5 here. And this should have a decent bounce here for a possible reversal up into back test, 140 or 148. That will be really key here. So do I really want to play the downside on JP Morgan? Absolutely not, right? A lot of traders look at these scenarios. Like here's another thing, right? And I don't mean to rant here. I'm just telling you guys, from my perspective, the way I see things, right? It's like just have a very logical approach to your trading style, right? Just think about it this way. Yes, the trend is to the downside, right? But look at the risk to reward ratio to the downside, right? You'll be taking, like, let's say you take this downside trade. This is what your downside reward is, right? Let's just call it this little segment, right? But the risk that you take on is all of this. You take on all of this risk. So the risk to reward ratio component here is absolutely terrible, right? So what I would do here is absolutely not even touch this stock. I just don't want to trade it. I won't trade it until I see the bounce or I see the breakdown of this level, right? So this demand zone is going to be a key level for me to actually see what's going on here, right? So I wouldn't touch this at all. It's just the risk to reward ratio doesn't make sense. That's just the way I look at it. Okay, I really hope that it's helpful for some of you guys. Okay, so then somebody asked for XLF, and I already mentioned about XLF. So we are breaking down within this trend. XLF is bearish below, let's just call it $36, right? Let me put an alert here, just to remind ourselves this week. Below 36, backtest, retest, right? So breakdown below 36, and then the retest here would be downside extension on XLF. Of course, we had a huge markup phase, distribution phase here. We are about to enter the markdown phase here on financials. So expect some downward price action here. But then remember that along with it, if financials rotate out, then this opens up other sectors for money to flow into. So money flowing out of financials will go into other sectors, right? And we saw utilities seeing inflows, but financials is a very big sector for money to flow out of. So the only other sector that can actually contain this is going to be either healthcare, right? Or it's going to be tech, or it's going to be communication services, right? These are the only three sectors that are as big as financials to handle all that cash flow coming out of financials. So you got to also look at how things pair up, right? Utility is a very small one, right? So definitely be looking at these major sectors this week for rotations. Financials, money moving out of financials, and then, you know, it kind of goes along with our thesis too. So that's another good thing, right? Okay, and then Moderna. Oh boy, this is just ugly, right? Once again, this is similar setup to JP Morgan here. Similar setup. Downside is very limited. Of course, we already spoke about this downside being there. Demand zone is right beneath it. Extension to the downside looks around 122, 120. Do I want the downside here? Absolutely not, right? I don't want the downside exposure. I don't want to play the short position here. I run my risk of getting short squeeze. There's a lot of risks here, right, with Moderna. So you don't, like, this is a very sold off stock. Let's see what is a short float on this thing too, right? Just to be sure. Okay, not that bad. 4.5%, not that bad at all, right? So not too crazy. But there's definitely better upside exposure than downside exposure here. Okay, then gold. So gold is in a technical breakout here, right? I don't know if you guys see, it's a huge cup and handle that kind of broke out, and now I've mentioned my consensus on gold multiple times. Now, I know a lot of you would be sucked into the headlines about gold. I just find it a very expensive thing to trade, that's all. And personally, my capital can be better used elsewhere. You know, when you're trading, remember, it's not about just what you're trading. It's also the efficiency, the ROI, right? The return on investment. Like, how much am I pledging down to trade this instrument, right? What's the risk reward ratio on that? You gotta look at so many other things, right? It's not just the technical breakout. So I know a lot of you are like thinking about gold and like, oh man, gold's breaking out. Yeah, let's go, right? Oh, you know, we're probably gonna get up into here, and you know, no doubt, we'll probably get into 190s. There is a very high chance. There's, you know, been pretty high demand here. Volume has been pretty high. But at the same time, I just find this a very expensive instrument to trade in general, right? And because it's an expensive instrument to trade, I don't trade it. I still prefer exposure on SPX instead, or exposure on QQQ, because it's cheaper. It's better return on my money. It's more volatile. It's more liquid, right? I can get in and get out, and that's more important to me, more than anything. So those are the things that I mean, especially like if you're trading big amounts of money, right? Liquidity is a very important part, right? Consider this, if you're a really small-time trader, you have like a $5,000 portfolio, right? You know, you're trading with like, I don't know, you know, 5 contracts, 4 contracts of options. Well, guess what? It's fairly easy for you to get in and out. But think about it from the perspective of a person like who has a bigger portfolio that's millions of dollars, right? That person has to take on hundreds of contracts, even thousands sometimes, depending on how cheap it is. And to move that kind of volume, you need liquidity. So instruments like gold, not that liquid. Not that liquid that people think it is. That's all. Okay. All right. I'll do the last one here, Veil, and then we're going to end the live stream. Let's see. Veil, Yeah, this one. We actually did a fundamental analysis on this business. Let me see. It wasn't long ago too, actually. Oh yeah, we did. Look. Our valuation was $25 actually. Wow, we actually were pretty on the money about that. This was done back in 2021 September. And the main highlights here about Whale were the financials were actually pretty decent. Pretty low debt to equity ratio, decent capital appreciation. Interest coverage ratio was decent as well. They have pretty okay liquidity. And then we also spoke about how insiders, or the amount of insiders that were buying into this company were pretty big, right? That was almost 10 million shares being, 524 million shares being bought in the previous quarter. And then there were some risks, of course, that we were pointing out. But valuation-wise was $22 all in all, based on mix between Morningstar and our valuation. So yeah. By the way, we do these valuations on our Discord as well, just from time to time. Of course, like for example, we did one recently on Baba. So yeah, we kind of give you guys the things that you need to know. That's what our Discord looks like, by the way. For those of you that don't know what our Discord looks like, this one looks like. Just a bunch of like-minded traders, right? Get together. We'll be putting out the playbook for this week. It's already out, actually. Snipers will be out in the morning, right before market opens. These are going to be clear pivot points for the week to trade. So we'll be picking in a couple of different stocks to trade this week. Of course, we have institutional flow. We have potential setups that we have algorithms kind of searching for this week. So I'll be picking some of the things from the snipers from here as well. Stock bot, we have a tweet bot, we have a whole bunch of things here. Really, really great value add for any trader who's looking to be really serious. This is the place that you want to be. We don't accept, that's one of the reasons why our subscription is on a slightly higher price tier, because we don't want people who are not serious about trading to join us. So yeah, that's one of the things about our trading community. Okay, in an effort to keep this live stream as short as possible, I'm going to end it here. I hope this was helpful. You guys want me to do another one on Wednesday? I'm kind of toying with the idea of doing 2 of these per week now. I decided to do one today and then, another. Do you have any openings in your Discord? What kind of openings do you mean? Do you mean like you want to sign up, or do you mean like what kind of openings? Could you be a bit more specific? Also, guys, remember to like and subscribe to this YouTube channel if you haven't, and let me know. Hey, I really like to hear from you guys. So do you guys want me to do another mini update on Wednesday? I could do one. I really don't mind. Same time, I could do another update on Wednesday. Market update. I don't think it would be as detailed as this one. I think Sundays should be very detailed, and then Mondays. Sundays should be very detailed. Now I'm going to be posting the updates on T's updates here with the institutional research as well. By the way, for those of you who don't know what it looks like, we post all. So we have institutional grade research that we post for you guys. Like for example, last week we had some reports that we posted about valuations. Of course, we look at the dealer positioning and market gamma positioning for the market, internals, etc. And just this morning, I posted the Goldman positioning indicator. Okay, for those of you that want to sign up for Discord, go to learncompoundgrow.com. This is the website. Okay, learncompoundgrow.com. Go to EGA Discord. Click on it. Click on the membership plans. Choose the membership plan you want. If you want live trading sessions with us, that means you want to follow along with the trades that I take live every Monday to Friday mostly. Click on the Wolves subscription. If you don't want the live trading sessions, but you just want to test us out, you want to trial us, click on Beta. Okay. So this is like a trial membership, and see whether you like the trading floor and you like all the things that we talk about. But you won't have access to live trading sessions. You won't have access to the trading alerts. You won't have access to trading bots. You won't have access to learning tools. And more importantly, you won't have access to the institutional research. People who are in our Discord and are on the live stream right now, it would definitely help if you maybe, spoke about your experience in our Discord. That would be cool. Telling people how you feel about it. That would be probably a more better recommendation than me saying something. But with the monthly subscription, this is what you would get. Now, that's how you get into the Discord server. And yeah, if you are planning to join, then see you there. Okay. Going back to the Goldman positioning indicator. So this week we got a big light positioning indicator. This is usually foreshadows some volatility in the market. So just putting it out there, be really careful this week, guys. Okay. Let's see. Yes, Wednesday would be good. Yes, very helpful webinar, especially starting before trading week. Thanks a lot. An update would be good to end the week and recap. Okay, cool. Well, we'll try to do one on, let's see. I kind of want to see how the market performs this week, right? But I feel like Wednesday, midweek is a good time to do an update, or Thursday. It's either Wednesday or Thursday. Either one of those two is what we'll look at. I will do another one, okay? And we'll keep it shorter. I feel like 1 hour is really long. I think like people drop off, and like attention spans nowadays, people don't have that big attention spans, I feel like. I really hope that you guys found this useful. I will try to continually put out more updates for you guys. I hope that you liked it. Purely educational, purely informational, and yeah, just straight to the point. No, no bullshit. No, like just straight up. There's a live trading session on Zoom. The live trading session is on Discord. So there's a little thing here called live broadcast. You click on it, and then you join the live trading session. And then I usually share my screen based on the charts. Like I usually show you what I'm looking at. I really go through the formation of a trade before the trade happens, through the point that I take the trade, the position sizing, what am I, like, what is the way that I'm kind of entering the trade, where am I looking to exit, where, I basically teach you through, right? It's not about signals. This is one of the things that I really hate about the current, this environment. Like, I mean, I hate to rant about it, but it's just, there are a lot of Discords out there that just give you signals, but they don't really teach you what to do with them. This is different, right? We are an educational Discord, so we are really just teaching you along the way how is the process? Like, how do you come up with the trade idea? How do you go through with it? How do you pivot all the way into the structure till you take the trade, managing the trade? How do you move your stop loss? How, like, all those things, right? It's just not just about entering and exiting. There's so many other things. Risk management, right? It's a very intricate process. And let me tell you something. You can feel very alone in a trading journey. I think that a lot of retail traders go through this. It's a lot of anxiety and pressure when you're trading alone. Having someone there in your corner who knows what they're doing and has been doing this for a while definitely adds to your, your experience and adds to your learning process. I'm not saying like I'm a perfect trader, I'm always going to hit 100% win rates, but this year we are at 205K for the year. However, I have some P&L that I need to realize, the losses that I need to realize, about 40K in losses. So we're about 160K P&L, and anybody in the Discord can vouch for every single thing, every single one of these trades that were taken, because we post them all for transparency on the Discord. So, for example, when I take a trade and we make a profit or a loss, I post everything into the P&L here so that you guys can see the transparency. That, okay, whatever that I said in the live is lining up with exactly what this P&L is. So that way there's full transparency, there's, just be real. Be real with one another, right? That's it. So yeah, for the year, we are currently at 205, but minus about, let's just say 40, 50, so 155. Not too bad for the first 3 months of the year, but we don't want to push our luck too much. March is going to be a volatile month, seasonally, right? For those of you that don't know, that March is actually a seasonally. Oh, where is it? I don't know. I need to find that chart. March is seasonally a rocky month for the S&P 500. But yeah. Okie dokie. I hope you guys have a great day. I'll see you guys on the Discord, or I'll see you guys on the live trading session. And I will see you guys when I see you guys. Probably on Wednesday or Thursday. In the meantime, stay safe, be cool. Remember, keep your emotions at bay and trade light this week. Seems to be a volatile week, so I'll see you guys soon. Take care, and bye-bye.